All right, Bismillah. All right, it's the first of the month, February 1st. This is my Post-Mortem Playbook wrap-up of today's price action. Guess it'd be ideal to do like a recap of the entire month, so to speak, in terms of the power of three or accumulation, manipulation, distribution, to see how we could have traded the overall month. But maybe I'll look into that for the weekend. Anyway, today we had high impact news, of course. OPEC meetings all day, 8:30 unemployment claims, ISM manufacturing PMI at 10 o'clock. So 8:30, 10 o'clock are the highlights of the day for potential increased volatility and some more dynamic price action. Anyway, here is the 4 hour. I prefer the 4 hour time frame, and we're going to use the 4 hour time frame today as our high time frame for our high time frame analysis. Again, this is the dollar. This right here. You can also see it here. You can also see the highlight for the 4 hour here. So you can easily see. All right, we had, this is Wednesday. Today's Thursday. So we have Wednesday. We have, so we highlighted yesterday that buy side liquidity was rated here. So we have price dropping below this bearish fair value gap. That's indication for you. We have another bearish fair value gap here, and I prefer my inverted fair value gap as my PD array I want to focus on. Or it's a couple of things. Even this volume imbalance over here could have been something if that's what you kind of gravitate towards. I just noticed it because my eye went there just now, and you can kind of see that price is kind of respecting that here. Anyway, it's not my I'm not using that tonight. You can do that on your own time if that's what you fancy. Anyway, this is for me as usual because I guess I'm selfish, but whatever. So price is still inside of this 4 hour fair value gap that has been visited quite frequently, and price has stabbed through, wicked through, but the bodies have been pulling back inside. So let's see what happens here on this 4 hour candle as well. But so let's drop down to a 1 hour. All right, so again, we have yesterday price running through the intraday swing high, pull back into that 4 hour inverted fair value gap, or this tiny fair value gap, but that's nitpicking. You have this inverted fair value gap here on the 1 hour you could use if this is your time frame you want to pay attention to. Yesterday we highlighted this this bearish fair value gap. Price traded above it, traded back down to reclaim bearish fair value gap. Right? So yeah, all of this you can see here, could have entered here, price couldn't hold above it. Short, retracement back into it. Yeah, like that. That's a breaker. Kind of like a Nike check or whatever. Not endorsing Nike or whatever, but trade what you see, right? So besides that, previous day's high, price wasn't able to hold above the previous day's high. Higher time frame level. Actually, what we should have done was kind of peek at the daily to kind of see, all right, it's still inside that consolidation range. Let's go back down. So we have previous day's high, liquidity rated here, and the drop back below this fair value gap that was definitely significant previous 2 days at least, and on the third day today. Here's your retracement. And subsequent break in market structure, even though you can't see it necessarily on this time frame here. Here's your retracement. You'll see it though. I don't really use these two. I just put it here for my experimental purposes, back testing purposes. So you have price takeout, previous day's high, pullback, retracement into this inverted fair value gap, because this was bearish. It was bullish. Yep, it's that hour. Whatever. Was bullish before. It traded below it, traded back into it as an inverted fair value gap on this 15-minute time frame. And that's your entry. And your stop loss will be here. Entry here. And again, this is the dollar, so you're probably not trading it, obviously, but still looking for the same setups that you normally would trade in your regular asset class or vehicle of interest. All right, so we have an entry on the inverted fair value gap as well as an optimal trade entry short 70.5, and here's your 2 standard deviations. We can go even further than that. Let's do 3, 4. So it jumped all scattered around, so it's that 7.5 interval. So did we do 4.5? We got a 4, no 4.5, so let's do that. All right, so there you go. And we have about 4 standard deviations back into this 4-hour fair value gap. So literally traded from one fair value gap, which you can see consequent encroachment was respected around here. Around so 8:30 was the news. You have a drop into this. It used to be a bearish fair value gap, is an inverted fair value gap on the 15-minute time frame. Right, so you have that being respected too. Inverted fair value gap, reclaim bearish fair value gap, however you want to play it. And of course we have this 1 hour. So definitely a short situation, right? Which means after this point here, at some point here, we're looking for bullishness on the EURUSD. But that's not the point. I don't even remember drawing that, but somewhere back there. Whatever. So that looks good too, right? Retracement. Ready to pull back. I got a tiny fair value gap here. Inverted fair value gap here. All right, but not the point. Not the point. Stay focused, right? Let's go to the NQ. Yeah. And let's look at the daily. You can kind of see price traded into this daily fair value gap. Don't worry about all that. Don't worry about all that. Right? Anyway, this is also a daily inverted fair value gap. Yeah, we can adjust it shortly and just go down. So we have a volume imbalance, traded back above that, filled in the gap here, and yeah, relatively equal highs here as well. So kind of expect eventually price will take these out. Literally all of this is relative equal, so you're gonna start at the shortest one. Let's go 4 hour. Okay, so this is why I kind of just adjusted. Here's a 4 hour fair value gap. I'm gonna just take this off. And it's a 4 hour bullish fair value gap initially, and price traded below it, inverted fair value gap. So 4 hour is this drop down to a 1 hour now. I don't know what this is, 15 minute. Yeah, 15 minute. Let's get that out of here. See, maybe useful later, so I'm not going to erase it. All right, so see how 1, 2, 3 drives pattern into this 4 hour fair value gap. Just like the market out. That's the kind of, oh, where do you go, right? Disrespect is real, right? Right, 1, 2, 3 drives pattern into this bullish 4 hour fair value gap, indicating that the liquidity is taken out. Nothing in life is guaranteed. I like to include that all the time. This is a game of probability and a game of the best loser wins. You gotta learn how to lose professionally, right? This is a volume imbalance. And you can see price. Literally, the bodies of the candles are trading above or holding above the consequent encroachment of this volume imbalance. So that's good money, right? We have this, then we have this break in market structure, right? So this was a legitimate trade. Anyway, this is the 1 hour chart. Price trading above this level here would be a market structure shift on this time frame. Market structure shift, and we have a retracement back down into this volume imbalance. So optimal trade entry long, you can do the wick to wick. So we're gonna look for an entry. Here's the first one. Optimal trade entry into the volume imbalance, 61.8, good money. And we have the second entry here. So of course the first target would be here. Then you got this inverted fair value gap here. Let's just draw it out just for, let's just steal this. Right, so we have this inverted fair value gap here. The price traded into, came back down into a volume imbalance. Then we had high impact news, 8:30, pretty much around these parts. Big wicks faking people out. Short 10 o'clock news and 11 o'clock rally. And optimal trade entry here, 70.5, 61.8 entry. Have a lot going on here. And you have your 2 standard deviations, 2.5 standard deviations from the price range that we highlighted here. If we do like if you don't like the body thing, you can do wick to wick, and you are shy of your 2 standard deviations. But again, we have draws on liquidity. A draw on liquidity does not mean that price has to trade into that level necessarily. It's a draw on liquidity. So so yeah, did that go? This is so that's one trade, the big trade. Technically you get got in here, and your stop would literally be at your entry point or a few ticks away. You got in here, and it's the previous day. Let's just drop down. All right. Same 3 drives pattern here. 1, 2, 3. Kind of swept down below it again. And you can just use that one here. All right. But he's still looking for a retracement and looking for a pull back up and a retracement back down. Still, we have a volume imbalance here for an entry, and you can see that during the London session. Here's your entry, long here, taking out this high into this bearish fair value gap, and you have another entry again down here using this high and this low. Optimal trade entry 70.5, and we just using wick to wick. And of course, if you tighten it down, then you should have a better risk to reward. And again, the stop loss is at the 100% mark, or at below the swing low. Entry, ideal entry or optimal trade entry 78.6, 70.5, 61.8, anywhere in this range, or anywhere below the 50% mark, which is the discount in this situation, because this is the range, previous day's range. We open up within the previous day's range. So you can say, hey, price ran the Asia lows during the London session, came up, ran the Asia highs, consolidated, came back down as if it was going to run this. You can see your 1, 2, 3 pattern here as well. Again, let's just take that, 2, and we got another 1, 3. So that's the entry here, even without the volume imbalance. Still dealing with this 4-hour fair value gap. And we have an optimal trade entry long here at 11 o'clock. And And you see price trade above this bearish fair value gap. Here's your entry again. If you missed that one, you missed this one, there's your entry. Again, the entire range is this high and this low. Just wanted to make sure. And as usual, I'm eyeballing it, so you want it more of a fine-tuned or refined level than, you know, do it yourself, right? Do it yourself. All right, so yeah, so this is the range. Previous day's low, previous day's high. This is where we open up at, and reason why I did that is to show that, hey, yes, optimal trade entry long, but this was a legitimate entry on this inverted fair value gap, because this pulled back below 50%, which is back into discount. So you could have entered here, still targeting the previous day's high, and seeing the price was going to get above this inverted fair value gap, and you can see it's rallying with some degree of force. And there you have it. There you have it, right? All right, so didn't have to drop down lower than the 15-minute. Of course we can. I'm not going to spend too much time. Same 1, 2, 3 pattern, 3 drives pattern. Same one we identified earlier is here as well. 3 drives pattern, breaking market structures here. Retracement back down into a fair value gap. Here's the range here. No, let's get rid of this. But you can see prices respecting that as well. There's the swing low to the swing high. The optimal trade entry here. Another opportunity here. And this is at 1 o'clock. All right, so we pretty much have an entry here during the New York session. Another entry during the PM session. 2 entries. And push higher to 2 standard deviations of this range. So that's 2 entries, technically 3, because you could have gotten at the bottom here, as this is the 3 drives pattern. And just a matter of you see your own trade setup and if you can accept the amount of risk that you are putting on for that trade. So here you were targeting here, so you have this pullback in. No, this is actually this previous day's low over here, right? Approximately. I'm not too sure if we adjusted it, but you can, right? 2 days ago low, and you can see that level is still significant here. This price is, if you think in terms of support and resistance, price traded back down into it, which is also another entry long at 1550, 350. And we can see that as well. Optimal trade entry around the previous day's 2, you know, I'd say times 2, right? Meaning 2 days ago, previous day's high times, previous day's low times 2. And you can see optimal trade entry long here at 1550 or 350 on the 5-minute chart. Thank you. And your 2 standard deviations, 2.5. Good money at 450. So what's that? 1. We got 1. Yeah, we're not gonna count this one back here. We're not gonna count this retracement during the London session. We can. This is 1. This is today, right? 1 entry here. Using this low to this high. Pull back. You can see it clearer for me on the 15-minute chart, but it's all here as well. And you got 1, 1, 2, 3. Here's your entry. Actually, I'm not even like counting. You can see market maker sell models here and there, but this is not the topic of discussion. But there's buy models and sell models going on here. So these are other entries, not a topic of discussion in what I'm reviewing here yet. I did take a trade, no, not on the NQ. I took a trade on the ES short prior to the news, 8:30, and prior to the news at 8:30. Yeah, took this short on the ES on the 1 minute chart. But whatever. All right, so we got one entry, 1, 2, 3. We have this entry. We have this entry, no, this one here, and this one. So you had 2 opportunities here. All right, let's go on to the ES. So that's more than likely from the daily, right? I mean the 1 hour. And I don't remember where these two are from. But that same 4 hour level or fair value gap we've been highlighting is still significant. Still significant here. And you can see price stab through. This is on Wednesday at 1400. As you can see, after that, price is holding above consequent encroachment. Not the wicks, but the bodies. And we have this inverted fair value gap here. And we have this bearish fair value gap here. So you can literally see how price is kind of pushed right through that. Again, I prefer my inverted fair value gaps, like I mentioned before, and especially when you can see prices reacting to it on multiple occasions. So these are my preferred. Then you have this one, inverted fair value gap here. Let's just highlight that for this because it's here. Right, and let's drop down to the 1 hour. Again, we open up within the previous day's range at a discount because this is below the 50% mark. All these relative equal highs up here, definitely a target. Do believe we had these here highlighted for indicating that they were equal. Didn't carry over. Right. All right, so it's highlighting that. So we have a run up, retracement during the London session into this volume imbalance. Did that. I'm not too sure. Let's go see something. Nah. All right, didn't do it. All right, so here's one of those situations where using the wicks doesn't doesn't quite reach optimal trade entry. Here's your volume imbalance. It is below 50%, so that is a valid entry. It's not optimal, just using the wicks. See what happens when we use the bodies. And we are golden here. We're golden here on the second entry. 8:30 was the news and 10 o'clock. So similar, right? So we have this 4-hour fair value gap. Fair value gap. Right. So even if you did that, didn't include the liquidity void here, then it'd still be valid. Okay, so we have a entry either on the volume imbalance on the 1 hour, consequent encroachment holding above that as well. Similar, the bodies are staying above the consequent encroachment of this 4-hour fair value gap. That's one. Retracement back down, here's 2. 70.5, 61.8 entry, stop loss below this swing low or this level here. And just to fine tune it. So stop losses at the 100% or the swing low. Entry ideally between this range or at a very minimum below the 50%, the discount range. And so actually this is one of the red lines that we saw. This is a bearish fair value gap that I think I just drew it and didn't. Sometimes when you are actively trading, you can't do all this color coordination. You just do it and know that it's there, right? And I think I use yeah, took this short here using this as a resistance and using not too sure what I use at this point here, but anyway, definitely entry was on the using the 1 hour, and it was a market make and sell model on the 1 minute. That looks crazy, right? Let's take this off. So there you go. So you have this entry here. And this was actually here, indicating this was a inverted fair value gap where price retraced back into this. Inverted fair value gap here, short, and targeting this low and the 48.8275 as the top of a inverted fair value gap here. Yeah. All right, so that was the short here. And then later on you could have, all right, so that's how many entries we have. The one I just described, don't even count that. That's So we have one entry here, taking out this, filling up this gap. That's one. Not gonna count you could trade the retracement as a scalp. That's two. And another entry, three. And this is still the 1 hour time frame. So one entry into London, taking out the Asia highs, retracement back down, back into this 4 hour fair value gap. And this optimal trade entry. All right. It's a wee bit clearer here. So previous day's low, high retracement into this volume imbalance. Here's your entry here, long, taking out these highs, trading into this bearish fair value gap. Once, take that out. Three, pull up, took out this swing high, and you got your. What time frame did I see this? I saw a 3 drives pattern. It's not clear on this one. Let's see. Yeah, I think I saw this 1, 2, 3. Not sure if it's clearer on the one. Yeah. I don't know where we were. I definitely saw the 3 drive pattern at 1, 2, 3. Here we go. Did this 1, 2, 3. Pull back, taking out these lows, which also created a 3 drives pattern here. 1, 2, 3. Stab down one more time, and here's your entry on this time frame. Let's go back up. Yes, that's not. Yeah, so here's the 4 hour fair value gaps that this one we've been using for the longest. Inverted fair value gap we highlighted before, and the one we just drew. 15 minutes, and you can see price working inside of here and then taking off. And the 5 minutes, you can see it. Right, so optimal trade entry, long. And yeah, 2 standard deviations. Not too sure how clear this is, but then we have again, London session entry, taking out these, trading into this bearish fair value gap, pull back, 1, 2, 3, drives pattern, reversal pattern, into this 4 hour fair value gap, holding above the consequent encroachment, and we have a push higher into this inverted 4 hour fair value gap, or this weekly open. And we can just see price doing what price does, right? Accumulating, manipulating, and distributing. All right. There's several setups there, so that was pretty good. This was despite news, and I know I kind of like bring up the news as a catalyst, but again, for me, what's most important is that you see your trade setup within price action. The Don't just like the news should do this, the news should do that, or the market is at all-time highs, or I'm expecting this to happen. Yeah, expect it to happen, but do some critical thinking, right? Have some proof, something that you consider to be weighty enough to allow you to maneuver in the market, right? To the downside, to the upside. If you're not a short seller, then don't trade short. Wait for your long entries. You can do both and do both. If not, do what's best for you. If you missed this entire move and you were busy, then that wasn't your trade. Don't even worry about it, right? You only caught a small portion. That's your trade. You caught this, not that. That's your trade, right? When you get skilled enough, then you can continue and catch the full range, right? But if that's not you, if you're not there yet, then don't sweat it. That's not for you. Like mostly everything else is not for you. It's not for you. Don't worry about it. You get there in due time. You gotta keep at it. Anyway, I am done. Oh, here you go. Here's your SMT divergence. That's what I was checking for earlier. Like who ran the low here? It's this girl. Right? Right, so there's your divergence. YM ran the low. ES and NQ refused to do so. So that's another confluence to price continuing to go higher. So when money talks, no one checks the grammar. Keep up the good work. Thank you for watching.